is Amit Pabari, founder and managing director of CR Forex. Last week we had three central bank meetings: Fed, Bank of Japan, and Bank of England. Fed was one of the most hawkish in their tone, and because of their hawkish tone, where they said higher for longer, it means that they're expecting the interest rate to remain at an elevated level for a longer period of time. That has resulted in dollar index trading above 105, and one of the most important aspect was US 10-year yield shoot up to highest level in last 16 years. Despite dollar index and yield trading higher, Rupee faced a strong resistance near 83.30 levels because of simply two reasons: RBI selling at higher levels, and then the news came where Indian bonds will be listed in JP Morgan bond index. Now the big question is, where is Rupee heading in coming days? Let us discuss that. Generally, market moves in three directions. Either they are trending up, or either they are trending down, or they enter into a consolidation phase. Now, consolidation phase will have a common characteristics where they will have positive and negative news both. Similar thing has happened in Rupee also, where there are positive news like stronger fundamentals of India, JP Morgan bond index में अपना inclusion, and on the negative side we have higher dollar index, higher crude oil prices, and 10-year yield trading above 4.40 levels. So looking at all the factors, we can conclude that for the next 10 to 15 trading session, the pair might enter into a consolidation phase where 82.80 and 82.50 will act as a very strong support for the pair, and 83.30 to 83.45 is going to act as a strong resistance for the pair. The important aspect is how do you manage your exposure when the pair is trading in a consolidation phase. Let us discuss that. Now let us discuss strategy for thin margin exporters like agri exporter or chemical exporters. Whenever the pair is trading above 83 levels, we have been constantly suggesting them that they should cover their 80 to 100% exposure between 83 to 83.20 kind of a level, because we have seen that RBI have been constantly intervening at higher levels, or there is some kind of positive news is coming because of which Rupee has been appreciating. If you see the table, you will observe that on 17th of August the pair was trading close to 83.16 kind of a level, and on 24th of August the pair went as low as 82.36 levels, and similarly couple of times we have seen that 83.30 is getting rejected. So the theory that above 83 kind of level you should constantly hedge. That is the strategy for coming days. Hedge 80 to 100% of your exposure between 83 to 83.30 kind of a level. If someone wants to wait, they should keep a strict stop loss of 82.80 or costing, whichever is higher. Now let us discuss strategy for thick margin exporters like textile exporter or engineering exporters. As the pair has entered into a consolidation phase between 80 to 50 on the lower side and 83.30 on the higher side, the right kind of strategy for any thick margin exporter is that above 83 to 83.30 kind of level, they should ideally book their forward and increase their hedge ratio. And whenever the pair is trading close to 82.50 or 82.80, they should use the forward. Ideal hedge ratio for any kind of thick margin exporter is, if they are booking under confirmation order basis, they should keep a hedge ratio between 80 to 85%, and if they are booking under anticipation basis, they should keep a hedge ratio between 55 to 60%. Now let us discuss strategy for importers. From last 2 weeks, we have been suggesting importers that they should only cover their near-term imports between 82.80 to 82.90 kind of a levels, and market has given those levels. For coming days, if we have a near-term imports between 7 days to 15 days, they should cover 60 to 80% of their exposure near 82.80 and 82.90 kind of a level. If you have medium-term imports, say from 16 days to 45 days, you can cover 30% of the exposure near 82.80 kind of a levels. For the remaining exposure, you should wait for a lower level of 82.5 by keeping a strict stop loss of 83.35. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.